Let me ask you something most people don't think about until it's already expensive. If something goes wrong in your home, who actually pays for it? Your HOA or you? If you live in a condo or a townhome, this question matters more than most people realize. One quick clarification before we go further. When I say condo or townhome, I'm grouping them together for simplicity, but in practice, they're often treated differently. In many condo communities, the HOA carries most of the exterior responsibility. In townhome communities, owners are often responsible for more than they realize. Sometimes roofs, sometimes siding, sometimes exterior features, depending entirely on how that HOA is structured. That means the coverage line can move closer to you in a townhome than it would in a traditional condo. So, if you own a townhome, don't assume exterior equals HOA. Always verify it in the governing documents. A lot of people assume the HOA has everything covered. You pay dues every month, there's a master policy, there are meetings. It feels like the risk has been handled somewhere else. And that assumption is usually where the exposure starts. I've seen it play out like this. Someone calls after a loss. A pipe breaks inside the wall. Water spreads into neighboring units. The HOA responds quickly. Contractors show up. Drywall is open. Equipment is running. At first, it feels handled. Then the questions start. Who's paying for the flooring? Who's going to pay for the cabinets? And who's paying for the damage inside the unit? That's when people realize the HOA policy stopped much sooner than they expected. In most cases, the HOA covers the structure, the framing, the shared plumbing, sometimes the drywall. But once you move past that point, finishes, structures, and personal belongings, that responsibility usually shifts to you. Flooring, cabinetry, counters, built-ins, furniture, personal items, that boundary where HOA responsibility ends and yours begins is the most misunderstood part of HOA and homeowners insurance responsibilities. This is where people usually hear the phrase walls in and assume it explains everything, but it really doesn't. Your homeowner's policy is often described as walls in, but the walls themselves don't actually define responsibility. What defines the line is the HOA's master policy. Your policy isn't designed to start at the drywall. It's designed to fill whatever gaps the HOA policy leaves behind. In some communities, the HOA covers only the structure and the framing. In others, it covers original interior components as they were built. In a few cases, it even covers finishes. That's why two people can have walls in policies and still have very different claim outcomes. Your homeowner's policy adjusts to the HOA, not the other way around. So instead of thinking walls in versus walls out, the better question is, what does the HOA insure and what does it stop short of covering? That's the line your policy needs to pick up. And that line can move over time without you realizing it because HOA policies are not static. Not all HOA policies are written the same way, and they don't stay the same forever. Some are bare walls, some include original interior components, some exclude everything inside the unit, some reduce coverage over time to control costs. I've seen many people rely on coverage assumptions that were true years ago but quietly stopped being true. Two neighbors, same community, same floor plan, different claim outcomes. Not because one did something wrong, but because the HOA updated its master policy. Coverage definitions change, interior coverage gets reduced, deductibles increase, loss assessment rules change, and while notifications are usually required, they're often delivered in ways that don't make the risk feel obvious. A meeting agenda, a mailed notice, a line item buried in board notes. So, unless your personal policy has been reviewed alongside the HOA policy, you can slowly become underinsured without realizing it. That's why my neighbor's claim went fine is not a strategy. Now, let's talk about deductibles because this is where people really feel the impact. HOA deductibles are often large, $25,000, $50,000, sometimes even higher. So when a loss occurs, that deductible doesn't disappear, it has to be paid. Sometimes it's split across all units. Sometimes it's charged entirely to the unit where the loss originated. Sometimes it shows up as a special assessment. And suddenly, you're responsible for a deductible you didn't plan for. You didn't expect it. You didn't budget for it. This is where people say, I didn't think this applied to me. Your homeowner's policy can include loss assessment coverage. That coverage exists specifically for shared losses and HOA deductibles, but only if it's included, and only if the limit is high enough. If your policy has $10,000 of loss assessment coverage and the HOA assesses you $30,000, you're writing a check for the difference. That's not a loophole, it's just the structure. Now, let's talk about upgrades because this gap is quieter but just as common. Most people don't leave their unit exactly the way it was built. Over time, you improve it. You get better flooring, you update your cabinets, you get new countertops, you remodel your bathrooms, improve your lighting. All are reasonable and normal things. But the HOA policy almost always rebuilds to original condition, not your upgraded version. So if your personal policy hasn't been adjusted to reflect the current interior value, you can end up with a partial rebuild even when the claim is covered. The structure gets repaired, but the finishes don't match what you had before. That's another core part of HOA versus homeowner insurance responsibilities. The HOA insures what it owns. You insure what you changed. Now let's talk about personal property because people assume it's included when it usually isn't. Furniture, electronics, clothing, kitchen items, personal belongings. The HOA policy does not cover your stuff. If there's a fire, if there's water damage, if there's smoke damage, your homeowner's policy is the only thing standing between replacement and loss. And if those limits are too low, you find out immediately. Now let's shift to liability because this is one of the most dangerous assumptions. If someone is injured inside your unit, the HOA policy does not protect you. If water from your unit damages another unit, the HOA policy does not protect you. If a guest slips, falls, or gets hurt, your personal liability coverage is what responds. The HOA's liability coverage protects the association. Your policy protects you. And if you don't carry enough of it, your personal assets are exposed. This is why HOA living doesn't eliminate risk, it redistributes it. And if you don't know where that risk landed, you're the one holding it when something goes wrong. A lot of people try to simplify this with short rules. HOA covers exterior, you cover interior. It sounds clean and easy, but it's also incomplete. The real answer depends on the HOA's governing documents, the master policy wording, the deductible structure, how losses are assessed, and how your personal policy is written. There's no universal setup. there's only coordination. This is also why buying the cheapest HOA policy option is rarely a win. Having a few dollars a month feels good until one uncovered loss erases years of savings. Insurance doesn't work when it's treated like a commodity. It works when it's structured intentionally. So, if you live in an HOA, here's what I want you to do. Get a copy of the HOA's insurance summary, not just the CC&Rs, the actual insurance certificate or coverage summary. Look for what the HOA covers, where that coverage stops, what the deductible is, and how losses are assessed. Then make sure your personal policy fills those gaps precisely. Interior structure, where required, upgrades, loss assessment, personal property, liability. When HOA and homeowner insurance responsibilities are aligned correctly, claims get boring, they get handled, and life moves on. When they're not, claims get stressful, personal, and expensive fast. If this helped you understand how your coverage actually works, go ahead and like the video and subscribe. It helps get this information out in front of people who don't realize how exposed they really are. I'll link additional resources below so you can double check your own setup. Thanks so much for spending a few minutes with me, and I'll see you in the next one.